This is my first opportunity getting to speak to the crowd here. And I've decided that I'm going to start you all off with a titanium jar, which might ensure this will be my last opportunity to speak to this crowd as if you will. So from time to time, people will ask me, what does it take to be successful in the titanium industry? To which I always respond, you cannot fatigue easily. Hopefully, I don't fatigue you too much with my presentation here today. So I'm going to just pause here for a minute. This is our cautionary statement regarding forward-looking statements. So I'm going to just give everybody an opportunity to read this here for a second. I feel you'll see a lot of these as we move through the presentations. All right, so just a quick overview and summary of the presentation that I'm going to take you through. We're going to start off by taking a look at the duopoly performance and outlook going back from 2024 to where we stand today. Next, we'll look at order backlog, which is continuing to grow and signaling the sustained growth within the aerospace industry. Then we're going to move along and take a look at some of the airline capacity and traffic dynamics that we know are so important to driving the overall demand for the industry. Shifting over to some macro hiring factors and how that's going to affect structural titanium, and then some potential head moves that we see maybe in the near-term market. And again, a couple additional factors that I would like to cover before I start closing statements. So diving in here, this slide captures the 2024 delivery performance of both Airbus and Boeing. You can see that deliveries fell 12%, really due to the Boeing quality issues and the strike that took place in September. While Airbus grew, their growth was inhibited by supply chain challenges. So Airbus was up 4%, while Boeing was down 34% due to some of those quality challenges with the strike that you curve there. If you take a look at the graph on the right, that is the stacked delivery year over year. And while we were on a fairly steady trajectory of higher deliveries, 2024 marked the first year that deliveries decreased overall as we were coming out of and recovering from COVID, which was certainly the impact in 2019. Moving forward and taking a look at 2025, Airbus delivered 373 aircraft as of the end of July, which is down 7%. This is largely due to supply chain challenges, notably on the A320 constraints of engines, and wide bodies are down 11% as well, based on similar supply chain challenges. The A220 is up 31%. Moving down and taking a look at Boeing, you can see that they are up 50% on their initial recovery at 328 aircraft, with the 737 notably being up by 45%, the 787 being up by 61%, and the 777 being up by 175%. If you take a look at the stacked graphs on the right, that shows you where we are year to date as compared to 2024. So we are certainly ahead of pace as compared to 2024. And if this case continues for this year, we will exceed 2019 deliveries. So this slide takes a look at the forward production landscape, really emphasizing a significant ramp-up that we're still seeing across the industry. Despite persistent supply chain constraints, demand continues to outpace supply, especially for wide-body aircraft, where key programs are sold out already beyond 2030. However, production targets are continuing to slide to the right, meaning that those timelines are being pushed due to supply chain challenges and operational recoveries. If you take a look at the MD2 graphs on the right, you can see that narrow body deliveries are projected to grow at a 13% compounded annual growth with a steady increase through 2029. Going down below that graph, you can see that wide-body deliveries are showing even stronger momentum with a 23% CAGR, which is really just reflecting a robust increase in the long-term commitments on international travel use and recovery within that part range. Ultimately, the pace of production and deliveries are going to depend about how quickly the supply chain stabilizes and how everybody is brings a core delivery into the OEMs. Next, we're going to take a look at commercial aircraft backlog. And this slide is highlighting really the significant growth in the backlog that you've seen since 2019. So if you take a look, the slide up, or the chart on the left shows you where the backlog was in December 31 of 2019, really pre-pandemic levels. And then the table charts growth as we see it today for the end of July of 2025. Airbus increased their total backlog by 16%, while Boeing increased their backlog by 17%. I think the notable shift to look at is the increase of wide-body aircrafts, which we know a significant support by any other than the narrow-body aircraft. So Boeing's wide-body aircrafts are up 64%, while Airbus is up 14%. That represents an overall increase of a 44% backlog on wide-body aircrafts. Currently, the backlog represents nearly a 10-year backlog for narrow bodies and more than a 10-year backlog for wide bodies. So certainly the demand side is incredibly strong. If we take a look at recent order activity, we can also see that book-to-bill rates are up. So while the narrow bodies are starting to slow down and come down, as the new chart on the top left represents, you still see that they are well above 1x. If you take a look at the chart on the right, which is wide bodies, you can see a notable acceleration in 2025, with the book-to-bill ratio surging beyond 3x, which is reflecting a strong market momentum and really core interest in long-haul aircraft. Very aligned to what we were talking about on the previous slide with the significant increase in wide bodies. So with this, I thought it was important that we take a look at some of the aerospace macro environmental factors. So this slide really illustrates recovery of the global airline traffic growth, but certainly a slowing down of that as well, probably to a more stable state at about 6% growth. Moving on and taking a look at oil prices, which we all understand is incredibly important to our industry, they're at a healthy level. And really what a healthy level means is that the prices are low enough to support airline profitability, but high enough to continue to incentivize investments in fleet upgrades, with fuel making up 25 to 40% of an airline's cost, and next-gen aircraft being 15% more fuel efficient. And then finally, airline operating profit is on the rise. It shows a clear rebound from the significant losses coming through COVID, and is projected to be $66 billion this year, as compared to $62 billion in 2023. So take a look at, let's say, all of the demand side data and statistics. You could conclude that the titanium industry is in an incredibly strong position, but which I do think is the case. However, I do think it's important to look at what some of the potential headwinds could be here in the near term, which could potentially disrupt or push out that recovery. So supply chain challenges continue to be a constraint. We still have many single point of failures, probably most notably within the engine tons, critical castings and forgings that could easily push back that recovery or slow down those deliveries. Also, we're going through, I think, what would be an inventory adjustment period as we are trying to right-size the amount of titanium in the industry. And that could pose some near-term challenges as well. And it's difficult to project exactly how long that lasts or the magnitude of it because there's no great statistics or data around how much inventory exists through our incredibly long supply chain. Next, Boeing needs to continue to show operational improvement. Certainly, the initial recovery in 2025 has been incredibly encouraging, bringing out the door plug incident and the strike. However, we also all know in this free-running manufacturing that the level of difficulty continues to rise as rates increase. And there's certainly still a high level of regulatory scrutiny around increasing rates. And then finally, the potential risks that just could impact commercial tariff threats. And so really, potentially the softening of consumer sentiment, feeling of a looming recession risk, and really tariff-related uncertainty continues to be a potential factor that could really impact the supply chain here in the near term. I didn't get into too many details of my presentation about the impacts of tariffs, just because I knew that by the time you saw the presentation, it would likely change. But I think we probably all agree that tariffs are real and they're starting to impact our industry, but we're not exactly sure what that's going to look like yet in the long term. With that, the existing gap between demand and supply really suggests that aircraft production won't track traffic growth, at least in the medium term. So, this titanium recovery is holding steady, and I think it's fairly clear we've seen an increase in backlog of aircraft. We've seen an increase of customer miles. Where to next? And so, really, I've organized this here into three pillars. First is quality. I think it's incredibly important that every person in this room, every supplier in this room, continues to have a zero defect mindset and really just a relentless commitment to quality. Next is the reliability of our supply chain. As we talked about earlier, the growth in deliveries have been inhibited by the supply chain at times. We've certainly seen an increase of investment in melt capacity across the industry in 2025. But it's important that we continue to address single points of failures within the supply chain. And with that goes along with a security among geopolitical risks. So getting new material qualified, getting new suppliers qualified is a very long and drawn out process within the aerospace supply chain. And I think we're going to see a continued shift in that direction, so the uncertainty within the tariffs that are out there. And then finally, really just focusing on our capabilities. So not only training and development of our people, which are certainly the heart of all of our organizations, but investment in the right technology, and the continued use of items like AI, digital twins, and smart manufacturing, which we're already starting to see an impact in the industry. But I feel like that technology is still very new, and we will continue to see a significant acceleration in the next 3 to 5 years to prove that space. So to wrap up, I'm going to leave you with 6 points. So I think first we're seeing steady deliveries and strong order momentum and solid backlog, which would reinforce the long-term strength of structural titanium in our industry. With that, our strong airline performance, both RPKs and ASKs, and macro indicators, despite the lingering operational and supply chain challenges that we're seeing. With strong growth in titanium demand, it is on all of us to rise to the challenge and make sure that we're ready to grow As I mentioned earlier, we're seeing some significant expansions in titanium melting capacity, rather most notably in the U.S. But it's important that we're looking at all layers of our supply chain. Technology sustainability are going to continue to drive innovations and shifts. And I really think that solving those challenges are going to be fairly fun and exciting in the next 3 to 5 years. And finally, the industry's commitment to quality demands attention from everybody in this room and at all levels of our supply chain. So in closing, 2025 presents a landscape of cautious optimism. I think demand is real, but it's uneven and unpredictable at times. And our job is not just to react to it, but to ensure that we're staying ahead of it. Thank you very much.
Our next speaker will address the defense market.